What is Chefsheet recipe and ideal costing, and why should you pay the low price of $39.99 per month or $4.25 per year after a 14-day trial to use recipe and ideal costing? To explain, consider the story of the three restaurateur brothers, Luigi, Noah, and Redwood. Luigi, the oldest brother, owns a pizza place in Manhattan with a food cost of 20%. Noah, the middle brother, has a lobster shack in Maine and runs a 45% food cost. Redwood, the youngest brother, has a vegan burrito restaurant in Bolinas, California, which is north of San Francisco on the coast, but you can never find Bolinas because the locals tear down the street signs. Redwood runs a 55% food cost, selling no meat at all. Now Luigi, who changed his name from his given name of Lou, looks down on his two brothers for running such high food costs. Luigi is very proud of his 20% food cost. Redwood, who changed his name from Rex, sees food as a human right and distributes his profits equally amongst his staff. He works about 5 hours per week, preferring to tend to his gardens in the woods. He has no training programs and took down the restaurant's security camera system after an employee expressed that he was concerned that the fields emitted from the camera would damage the food. Redwood sees his brothers as part of a broken system, chasing money instead of peace. Noah likes his two brothers and does not want Luigi to feel badly about his business, nor does he wish to offend Redwood's sensibilities. For these reasons, Noah has never told his brothers that he makes about twice as much money as Luigi and a lot more than Redwood. Because the three are brothers, all three of their restaurants serve the exact same number of guests. Luigi sells his pizza for $15. Each pizza costs him $3 to make, and he makes a $12 gross profit from each pizza, which is pretty good. Redwood sells his burritos for $6 with a 45% food cost, so it cost him $2.70 and he makes $3.30 for each burrito. Noah sells his lobsters for $50 with a 45% cost, so his gross profit from each guest is $27.50, which is a lot more than both Redwood and Luigi. These three examples show the limitations of running your business by simply knowing your cost of goods. Knowing your COGS is one thing, but if you do not know what your COGS should be, how do you know if these numbers are bad or good or could be better? You don't. Luigi has a good food cost, but may be overly concerned with keeping costs low. After finally having a talk with Noah, Luigi decided to add higher ticket items. Higher cost items increase his sales and gross profit. Chefsheet will allow Luigi to monitor the specific effects of higher cost items on his cost of goods, and not to be deterred when his food cost increases, as his profits do as well. Fearing for the long-term success of Redwood's restaurant, his staff voted to fire Redwood and take over themselves. The staff started using Chefsheet to see that their food costs should have been 15%, and that excessive waste and product being socialized was destroying the restaurant. While it has now been 2 months and the restaurant is now very profitable, Redwood has still not yet learned of their decision to fire him. Noah had been using Chefsheet for some time and continues to monitor his recipe plate cost and restaurant's ideal cost while working on his second location.